Good morning. I got to get my Safari up and running. Let's see. We're going to go here. There we go. Boom, 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 boom. We've got that up and running. Now I've got to set up. We're going to do some scans, but I'm going to set up my laptop so that I can close, force quit. Let's see, there's nothing open. We're going to go to Safari. We're going to make it a smaller version. And I'm going to log into my account so I can start trading. Your boy needs to make up some money. Morning, Zephin. Oh, come on, no. Let's see, account positions. I hope AVRO. I hope. Again, Tom is probably the greatest trader that has ever lived. The guy, and you know, listen, there's no screenshots of it or anything, and I trust him, but he does seem to time things perfectly. Never a loss. Never a loss. I don't need proof, though. We're not in a game. It's not a competition. Okay, that seems to be... Let me make sure this is set up correctly. I like you guys seeing the chart mostly. I guess I can do this here. This is what we'll do. We'll move this over. We'll move this over. Oh. We'll move this over. And we'll make this larger. There we go. And we'll move this back over here. Lock this in place. Boom. It's a little bit better so you can see it. You know what? I do want to make this smaller, though. I think it makes sense to... So you can see the time frame that I'm on. God, and this setup. Sorry about doing everything setup-wise. But I think you should see that. Okay. And we can move. I like that. Lock there. Boom. It's a little bit better. And what I can do is move this in a little bit. There we go. Okay, that's a little bit better. GNS is running, by the way, if you hadn't seen it. We're going to... I've got that. I need to do my scans. If you're not in the private... By the way, hit the thumbs up button. I always forget to do that, and I am guilty. I've got to turn down my volume on my phone. I watch you guys on my phone because for some reason, I seem to be better at looking at the chat on my phone than on my actual screen. James, it was a good day. The $800 loss was greatly diminished by the six-figure gain in my overall portfolio. And James, I was serious, man. Yesterday, and I need to make this lesson for everybody. Everybody. Do not listen to... I'll put in Arch there for you. Is Arch moving? I haven't looked at a lot. Let's see. You passed your ex-dividend date on Arch. They may announce something on earnings. But you're past it. You're above your 200-day. You have this gap up here to 163. Let's see about Arch. I'll put in Arch. You know what? I'll do Arch for Zephyr. Because Arch, that's the coal play, I think, right? I think it is. It's a 0.66% dividend. They're announcing on February 16th. Zacks puts it, this is just these dumb Zacks things. In our table, it's a strong buy. Zacks estimates the power of changing earnings picture is determining your term stock performance. Therefore, Zacks updates Arch Resources basically reflects positivity in its outlook performance. Harnessing the power of earnings estimates, earnings estimate revisions for Arch for the fiscal year. The coal producer is expected to earn $51.65 per share, which is a change of 152%, which is, already here's the thing. You can read this sentence and go, oh my God, it's 152%. Whether your grandmother's making meatloaf or not for Thanksgiving dinner next year is already priced into the market. So don't think that there's a major thing. Yeah, I mean, they could. But, Zephyr, what's rule number 1? I'll wait till you type rule number 1 to me, so it gets pounded into your head. What's rule number 1? I'm not saying it's not true. Rule number 1, don't listen to a douche on the internet. I'm not calling Tom a douche. I'm just saying. Reality is, do not listen to somebody on the internet telling you that they're, No, rule number 2 is don't listen to Kramer. Rule number 1 is don't listen to a douche on the internet. And to you, Tom is a douche on the internet. To you, I am a douche on the internet. March, I think March 3rd, I thought March 3rd was the next, and my remote's dead. Hold on. I have to go get are these rechargeable? Oh, I have such old eyes. I can't even see if these are damn rechargeable. They're alkaline. I don't think they're rechargeable. March 3rd, I think, is the next Fed meeting. And what Jay Powell said yesterday is we're going to use the hold on, I got to go get more batteries for this. I will be right back. think those things should have given out those batteries on me. I hope it's the batteries and not the actual stick that's going bad. Let's see. Okay. Okay. I got Arch in there for you. I'll look at it, Zephin. I mean, there's nothing that tells me that, you can read here their last earnings. I don't know when their last earnings were. To announce fourth quarter, issued press release, announced fourth quarter. Arch. I think BlackRock, by the way, I think they sold a bunch of Arch. But you can read about the last dividend on Arch on FinViz. But according to FinViz, the dividend yield is 0.66. So I don't think it's a like, oh my God, it's going to blow it out of the water kind of thing. And by the way, GNS continues to go up. Oh, I'm getting FOMO. But GMS and rule number 1, don't listen to somebody on the internet. Sherry versus never hit $3 again. I almost bought in, but it's at $1.38. I think a lot of the short squeezes, other than GNS and Carvana, have been put aside by the risk-on folks because there's so much bullishness with Amazon. And, I mean, look at Meta. Meta's just gone nuts. 40 billion. Here, and I'll bring this up. $40 billion buyback from Meta. $40 billion. They could buy Twitter. They could buy Snapchat. They could buy Pinterest. All of those companies with $40 billion. And the only reason they won't is because there's no way the Justice Department would allow them to do that. The Justice Department or the government would stop that. Let me see. Bed Bath & Beyond. Are they moving? Bed Bath & Beyond. Oh, they are moving. 343. Wow. So we'll Carvana. I'm gonna put my GNS, Carvana, and Bed Bath & Beyond in my short list. Because the others, it doesn't mean that the others aren't going to move. MGAM is moving to the downside. Let's see where our boy Boyle is. It closed at 628. 651. It's got some momentum. Short term. Let's move to some scans. I'm gonna move to Market Scanner. I had a good lesson last night. I taught a lesson for a friend and his son, and I think they got something out of it, but we have some really good scans, by the way. Wow. That's crazy. 4 in the core portfolio moved up. In my brokerage, there were 3, and none of these are in the core portfolio. So my understanding is that they are planning to raise for March 22 and May 3rd. Following those, the market is planning to stop raising rates. Yes. But James, I'll go over it in my podcast, but I will tell you kind of the update on that. So Powell had every chance in the world, like he's done 4 other times before, to knock the market down. And he had every chance in the world to say things that were bad. The worst that he said that I heard was he does not think that they will reduce rates at any point in time this year. But the difference between that statement and previous statements was that he said we won't. He doesn't think that they'll lower rates, but he said I'm not opposed to it if the data reflects that that is needed. And so the market took that as, hey, game on. The data's showing inflation's coming down. We don't need a weak jobs market. And the difference is, and here's where, I hate talking politics on this particular portion. I usually leave the politics to the other stuff. But the labor force, there's 1.9 jobs for every person looking for work. When you had COVID go out, you had early retirements of people who were probably more susceptible to COVID, older, maybe people who kind of looked at their life and said, I don't want to go into work every day. I'm going to find something else. So they found something else. And so you have people who aren't necessarily returning to the workforce. You also, through the Trump administration, had an enormous reduction in immigration. Now, legal immigration. We're not talking illegal immigration. We're talking legal immigration. That has put a huge strain on the workforce. And so between those two things, you just don't have enough workers. Go to a hotel, go to a restaurant, try and find out. I've been to hotels all through last year. I couldn't, have my room cleaned in most hotels because they didn't have the staff. So, that as long as that dynamic remains, Powell is saying they're having to pay more for lower service jobs, which means inflation, which means it's risen. Now, mind you, here's the thing, and this is what a lot of people don't understand. When inflation reduces, that's not reducing prices. That's just reducing the amount that they're increasing. Reducing prices is what's called deflation. And deflation, it probably won't happen, and that's not something the Fed is looking for. So I'll go over it a little bit more in my talk. And I by no means am an expert in this. Again, it's just another douche on the internet who spouts off things. Let me see. Is Arch in energy? No, I don't have Arch in energy. I'll put Arch in energy. Arch should be in energy. Is BTU in energy? I don't think it is. It should be. If you are subscribed to TrendSpider, and remember, TrendSpider is the platform that I am using right now with scans and my algorithm and things of that sort. The link is in the description below. You can use DSP25 for 25% off. I provide you my algorithm, and I give you the watch lists that we have. There's the core portfolio. There's energy names that we trade. There's levered ETFs that we trade. There's low-cost Vanguard ETFs and spider sectors. And I'm going to get a customized watch list of, hey, these are the shorts that we're currently looking at. These are the scans that we're currently looking at, and blah, blah, blah. Yeah. James, Rule number one that I taught the guys last night was invest in what you use. Honest to God, invest in what you use. Second thing is patience. Having a lot of cash in an upward trending market seems like, oh my God, I'm missing out. I have to buy. Don't feel that way. Now, again, you do want to buy some. You find a good company and you buy a little bit. You don't throw your cash, like I did yesterday, $5,000 into MGSM. Yeah. Okay. So we did the energy sector. Let's go to levered. There's nothing in the energy sector that, by the way, crossed up. Let's look at our levered ETFs. And if you're here, there's a few people here. Nothing on the levered ETFs is crossed up. Let's look at some of the Vanguard ETFs. Hit the thumbs up button. It does help. And if you're not subscribed, just hit the subscribe button, dude. Come on. Help a brother out. I hate to beg, but I'm not above it. And God damn, it's hot in here. VUG. This is Vanguard Growth. And I think this is a secondary cross-up. Yeah. So here's, if you guys are watching, this is the market scanner that I'm showing you right now. Here is the algorithm, just so everybody's aware. And if you've been here before, you know it. It shows you the entry point. It shows you the exit point. It shows you the performance. Over 1,000 candles, Vanguard ETF. And again, you don't want to trade this one. But over 1,000 candles, which is essentially 2 years because I use 4-hour candles, which means 2 candles per day. This one loses you 2.6% versus buying and holding would have lost you 11%. The average win on this one is 6%. I don't suggest you trade these. I'm just showing you what the algorithm kind of looks like. We can look at another name that might be a little bit better to trade, but what I use the low-cost ETFs for and the spider sectors for is to try and determine, hey, are we in a bull market for this particular stock? If you're looking at a stock like, say, Apple, or, better yet, Bank of America. Are we in a bull run with Bank of America? I would say yes. The XLF is in a bull run. The Vanguard Financial is in a bull run. Bank of America is in a bull run. So therefore, you want to make your determination as to where you're going to buy on those. And that's the way I use TrendSpider. That's the way I use my algorithm. It's never an absolute thing. It's always just an educated buying decision. And typically, I am not a day trader. So everybody knows I do day trade. I have the ability to day trade, but typically I'm a swing / buy and hold. I have a 40-40-20 portfolio, and I haven't gone over it in a while, but 40% I just don't touch. 40% I kind of address every 6 months to a year, and 20% I could hold it for a day. I could hold it for a month. I can hold it for a couple of years if I want to. But I identify those buys before I get into it. So it's interesting because who was it? Somebody wanted me to go over DVN. I know I wrote it down. DVN for Jackson. Devon Energy. It's an interesting one because he and I probably have about the same. I think my average purchase price, because I've purchased more around 60, my initial average purchase price was 53, and no spider sectors crossed up. But since I have purchased more on its way up, I think my average purchase price is around 60. And so we're getting down to the 61.70 is where it's trading at right now. Getting down to the point where maybe I should be looking at divesting. It is in a retirement account for me, so I can get in and out at any point in time. I just don't like to try and time it because all of a sudden, you may get, This is one that I really like, by the way. For long term, and it's up quite a bit today. Most of these are up, it looks like. But this is a stock that I really like. And I should have really liked it at 24, which should have been commonplace. I mean, with an RSI down around 35, the MACD so low, I should have seen it. You've got your earnings coming up. The danger is you've got this gap here between 26 and 27. I do think, by the way, God, I'm looking at some of these crazy pre-market gains. I'm in my personal watch list right now, just so you know. But Uber is one that I do like. I've got Meta in my personal watch list. Jumia, which is, I think it's the Amazon of Africa, if I'm not mistaken. It is not making money. This is not one. This is one that was significantly risky. And I think it was $12 stock at one point. It's trading at $4. I think it was $2 a few weeks ago. It's $11 price target in November from Morgan Stanley, and they're trading at $4. The monkeys don't know what they're talking about, though. Let's see if there's any insider. I don't see insider bars. Operates in e-commerce. Yeah, it's basically the Amazon of Africa. Kind of like Melly is the Amazon of Latin America. That's where this one goes. Do I bring this up? I mean, it does have confirmation on that 9-day, but it's a secondary cross-up. Here, if we look at our strategy tester and we go to the 4-hour on Jumia, it's a secondary cross-up. 326 was just a, phenomenal buy. But who knew? I mean, look, the 50-day is crossing up. The 50-day isn't even in the Bollinger Bands. You've got this cinching up of the Bollinger Bands right here. You could make 10% if it breaks through the 200-day. That's the question. And you've got your earnings here. Look, they're losing 89 cents a share. Their earnings are basically going negative, more negative. And that's why you went down from 475. You better have less than an 89 cent loss here per share, or else you're tanking it back down to 3. I don't think I'm going to bring that one up. I just don't think it's a good idea. I don't like that one kind of moving in that direction. Rocket Mortgage. Mortgages have been a big thing. I think I'm going to bring this one up because and I got PayPal. QDell, this is a maker of test kits for COVID. I had it in my list. I don't think it belongs there anymore. Zebra Technologies, this is a software company that ARC has. Atlassian, this is another software company, breaking through the 200-day at 170, and there's a gap up there at 230. This one is making money. Let me make sure. Well, their forward PE is 85. I mean, it's expensive. Earnings per share, 42, expected to grow 42%. Oh, they're not making money. Okay, they are not. Price to sales, 14. Upgrade from Jefferies, $150 price point. It's trading at 170. Too expensive. And here's your insider sales. 159, 148. I mean, he's selling all the way down to 129. And it's not small. I mean, you're talking about almost $1.5 million a day. Yeah, why would I buy into that? I'm not bringing that one up. Upstart is up 6% today. This again is just it's up above the 200-day. I mean, if I could short it, I'd short it. PDD, Pinduoduo. This is a secondary cross-up. China stocks have just been crazy. Chewy, way up there. NVIDIA, I have listed. This is a secondary cross-up. That just move has just been, Royal Caribbean, way above the 200-day. Hilton, way above the 200-day. This is my watch list, my personal one. MGM, way above the 200-day. Futu, way above the 200-day. Applied Materials, way above the 200-day. Airbnb, way above the 200-day. Plug Power, just getting to the 200-day. Again, anything that's been down is just shooting up. And I hate recommending them because they've run so far. Okay, that's my personal watch list, which I don't give others access to just because it's a little more risky, and it's ones that I'm not necessarily investing in. It's ones that I watch. So I guess I could create one that is a little bit less. What I would feel guilty of is if you guys wound up investing in something that wound up just going kaput. And that's what that list is. That list are companies that are not making money, that have, and Uber's in there. But I like Uber. Uber in my mind, and here's the thing. Oh, God, these are the ARC ones that crossed up. Coinbase. I'm going to say Coin. You know what? Coin. And I think Mara. I have to put Mara on this list too. I do have Mara, but Mara has just been, pulled back. They have their earnings on February 28th. With crypto going up in price this entire time, I mean, I'm not sure why Mara's pulling back, but God, at 7, I think it gets back up to 8. Let's see. Let's use the strategy tester on Mara. Are we out of Mara? No. It's probably going to get you out of Mara soon, but if this continues, you're getting back in. Christian, same thing as yesterday. All of those companies, Apple, Google, Amazon, have run up into this earnings cycle. Meta did as well. Here's the one thing that I'll tell you. And it's kind of the way I'm looking at it. What made Meta fly, and I really should do this on the podcast, but I'll do it more in depth on the podcast. But what made Meta fly is not that they had a blowout quarter. It's not that they announced a $40 billion buyback. It's not that they, got 2 billion active daily users. What made Meta fly is they cut costs. They cut their cost in the metaverse. I mean, they just stopped spending on the metaverse like crazy. And so it was a cost cycle. You know who else has a cost problem, not a revenue problem, is Amazon. And I've been saying that. Amazon, since it was 83, I've been saying when it got down there at 83, you should be loading up on this because it makes no sense. While it's super expensive, there is nothing that has changed about this business since COVID. And you're selling at the price you were at COVID. Meanwhile, you've grown your business. AWS has continued to grow. Your revenues have grown substantially. The only thing that changed is you added more employees. And what are they doing? They're cutting employees. Boom, your cost. Boom, you're back to the 200-day at 120. At some point in time, you're getting to that 200-day at 120. Now, I caveat this with if we are in a bear market bounce, and I say this, if we are in a bear market bounce, I want to show you what happened here. This is Cisco. In 2000, Cisco was basically a company that everybody thought servers were going to go crazy. Everybody thought Cisco is kind of the biggest thing. And you can see up here it was a $73 stock. It has not returned to that. And they have good earnings. They have good management. They mismanaged some things. But again, this and Nokia were the two that basically display this. And so up here, you can see this is a monthly chart because I can't go that far back. But this is a monthly chart where you can see right here in 2001, it shot back up several months in a row. And it had that button hook that I always talk about on the bottom. Well, God, it's at 21. This is a great company. Just a year ago, it was at 70. So it's at 23 right now. I should probably buy in. It's still, 23 years later? It's still 30% down if you bought back here. So that's where I caveat a little bit of Amazon, is that if you think this is, which I do, not 2000. Michael Burry thinks this is 2000. When he put out his sale, saying sell, his one-word thing right before the Fed announced. When he put that out, he's talking, hey, we're back in 2000. This is just a bear market rally. That's what he was talking about. And I have that in my notes to bring up, I think, too. But I thought it was important to bring it up here. Nokia phones, man. God. What did I have? I even forget what I had. I loved my freaking flip phone. I loved my flip phone. And customized ringtones. I mean, God. Merck has a cross up. Do I want to bring up Dow Chemicals? I mean, look at that run. That's a secondary cross up. Merck, I think, is a secondary cross up. Although, let's see. Let's use the strategy tester. Is Merck worth putting in? Yeah, it is. Yeah, we'll put it in. Merck is a good one. Okay, so the Dow 30, let's look at the S&P. I think I'm just going to go over, or we're looking at NASDAQ. I think I'm just going to get, oh God, Jesus, the NASDAQ 100. You have AMAT way above there. AVGO, Broadcom, which I've gone over before. Airbnb crosses up. ADP, which we've gone over before. This one's interesting. Increasing earnings, increasing volume. Does this have it? Let me see. Is ADP expensive? 30. Yeah, they are expensive. Year to date, they're down 5% in a market where you're up like 15%. You kind of got a double top here at 261. This is worth bringing up, though. I'll bring it up. It's an opportunity. Qualcomm Team PDD PayX. This is similar to, I think, ADP. Too many ugly gaps there. Although this gap up here at 125. No, I don't like it. Synopsis. Way above the 200-day. ISRG. Oh, it's a sinking ship. Too many gaps. I brought this up before. I kind of think that I brought it up here where as it touched the 200-day. I thought it was going to provide some support. And I thought maybe it could bounce up here. It's a good company. So on their earnings, here's what ISRG kind of said on their earnings. I'm going to bring it up. It's got to cross up. Earnings. China voluntary surgeries down because of COVID. That's what they said. And so that was why their earnings, they said their earnings would have been much better had that not been. Well, you know what? That's temporary. That ain't, long term. So you might as well look at that one. CSX. DLTR. This is Dollar Tree. You got that gap from the earnings before. It's expensive. It's up there. Zscaler. Ooh, another cybersecurity one. Under the 200-day with a gap up above, but that's a secondary cross up at a little bit of a high rate. I'll keep that one off. ANSYS. eBay is an interesting one. Marvell is a chip. Lululemon. I said under 300, buy it. It's at 315. I'm going to bring this one in because I do think Lulu will be a bounce back. Okay, now we're going to the S&P 100, and I'm sure we're going to have a freaking ton again. And then I'm going to have to make... this entire episode's going to be on scans, and it shouldn't be because we have so many freaking forward stuff to look forward to tonight. Okay, that's just Merck, Meta, NVIDIA. But I'm not going over it. You can go over it if you have TrendSpider. Sign up for TrendSpider below. It's a tool that will help you be me. So you guys that are tuning in, this is interesting. RIG. This is one that's been on a run. This is a big meme stock that has traditionally been, if we go back here to, let's go back to a weekly because I'll show you. This is COVID, and this is January 2021 during meme stock hype day, $2.50 to $5. I mean, it just ran up, and this is a weekly chart. So each week it was having a 27% January 27th, 4% the next week, 4% the following week, 1% the following week, 4% the next week, 0.57%. And then 20%. So it was moving like 20% a couple of weeks there during the meme stock trade. It's an interesting one. TA, Travel Centers of America. This is just a monster. It always crosses up. X-Pro. I don't know anything about them. Golar and LNG Limited. Boy, that's below the 200-day. This is, let's move this into the stride because this is a secondary cross up, I believe. Yeah, 21.97 on GLNG. But I think, let me make sure I think this is a micro cap if I'm not mistaken. Small cap. So not quite. Doesn't have the volume of so 10-day volumes at 745,000, 90-day volumes at 1.1 million. It's not really trading a lot in pre-market. Doesn't typically, like yesterday. Dollar General and Dollar Tree are kind of the same thing. So I think they wanted to merge at some point, but the gap's up here. I mean, the buy-in was at 230 here for DG, or 235. It ran up to 238, so you made $8. You need 23 for 10%, so it wasn't a huge run, but it hasn't gotten you out. Most likely the algorithm gets you out of this one. You're under the 200-day. That gap up here at 250 is over the 200-day. And if you look, DG in FinViz, their PE is 22. DLTR, their PE is 21. They're not bad stock. Again, from a recession standpoint, you guys are killing me, man, when you do this, and I got a Bed Bath & Beyond squeeze. Zephin, don't throw that out there without like a triple bar or something. Let me see. Was this the stock that I got a triple bar in? I think this was the one that I got. Oh, no, GNS was the triple bar that I had. Did this really go down to 282? Or is that just a whack? Nah, it's probably whack. It says low 282, but I think the bar's just screwed up. John, CVNA, you're up 100%. Don't be greedy, dude. Do not be greedy on Carvana. Carvana is going bankrupt. They're in a short squeeze. Take your 100% out. Take your profits. Then, assume whatever taxes you have. Then whatever profits you have, throw that in. Take it out, though. If you're up, here's my strategy, John. You're up 100%. Say you put in, just to make math easy, $10. Okay, so you've made $10. Sell it for 20. You've got $10 profit. Assume a 20% tax. So you take the $2 out. Take the $8. Buy it on a dip. If you believe that it's going up that much, buy it on a dip. Then you're playing with house money. So even if it goes to zero, John, you're out. I mean, you don't care. You got your tax money that you're going to pay for it. It won't go to zero, but I can almost guarantee you're not coming out with $8. I mean, people that play on this one, I played on this one yesterday with MSGM. I lost shit. I went from like $5,000 down to, I think, 4,200 on one of the halts. Yeah, you've traded 8 million shares in pre-market. It's at 1786. It got to its high of, it looks like, about 19. Morning, Sherry. Yeah, I lambasted you, Sherry, already. Grocery money out the window. I didn't put my money in, though, thinking it was $3. But no worries. It's all just a game. Nobody knows exactly where anything's going. I hope you didn't lose your grocery money, though. And I'll kind of go over this in the podcast. I'm going to start recording here in a couple minutes, but I think the short squeezes are the only one that there's the Carvana, Bed Bath & Beyond, and GNS are the only ones that really have news that I think is legitimate as far as, Jim Cramer's in Miami. Oh, great. This one just doesn't have news to push it. I mean, it's already down to 28. It closed at 37. I am glad I got out, by the way. I think I got in at 45. I got out at like 42 or something. I forget exactly what. But I'm glad I got out because I'd be down significantly. And there's no chance of it going back up other than a short squeeze. But you're only trading 652,000 shares. Your 10-day volume is 6 million shares. So this doesn't have the volume to continue to move up. Bed Bath & Beyond has the volume to continue to move up. So far in pre-bat market and Bed Bath & Beyond, you're at 13 million shares. You're trading 47 million in the 10-day, 29 million in the 90-day. Carvana, CVNA. Why do I always put an R in there? Carvana, you're at 8 million, 9 million shares in pre-market. You're at 39 million for a 10-day volume. So 9 million in pre-market is right around the amount that you want. So it's got room to run. But John, seriously, if you're in that one, I would probably take a nice. Think of it this way: you have a hot tub and a cold bath, an ice bath. While you're in the stock, you want to be in the cold bath. And you can kind of take it for a certain amount of time, but at some point you have to go to the hot bath. That's when you take your profits because you can sit back and relax. Your body likes the warmth. Your body doesn't like the cold. So Federal Express, FDX, God, it is such a good company. Such a good company. And you've got crazy business travel. Elf. Hold on one second. I got to be right back. I had to turn off my gas fireplace. Your boy is hitting up into managed care territory. Let me see. I have a new message, by the way. It says I have a Tesla service appointment. Kevin is coming. He's coming to repair my, it's under warranty. If I haven't told you, I love my freaking Tesla. And honestly, you should buy a Tesla. Let me look at ELF. And then I'm starting the podcast. FedEx is one you should have. Do I have this? I don't have this one. FedEx. Oh, I was talking American Express. What the hell am I doing? See? I'm telling you, managed care, man. I'm close to it. Ooh, that's a great chart. That's a great chart. Service, John? The actual car is amazing. Service from Tesla, it's been hit or miss for me, and I'm a 2018 Model 3 owner. So my car, I have a badge of honor on my back with a tattoo, just because my car was made in the freaking tent. I wish I had one of the newer ones. It's a phenomenal car. Don't get me wrong. Phenomenal car. I love it. I will never drive another car until something comes out with better tech, which right now there is no way it's better. There's nothing on the road that's got better tech. 100%, nothing that's better on the road. But service, I'm here in Atlanta. I've got 4 service centers to choose from that are all within driving distance, not horrible. They do keep the car for an extended amount of time. I had my windshield replaced, and the problem and I think other places can do it now, but prior, the Tesla had told me, hey, you want to have us do it because there's sometimes a problem with other car companies doing the windshield based on the camera for autopilot being in the windshield. It's kind of up there by the rear view mirror. So I had to do it. It took me 4 weeks to schedule it with a cracked windshield. Thankfully, it wasn't spidering. It was just a big kind of, puck in the middle of the windshield. The price was a little bit crazy. It was $1,000, but it was like $700 to $800 from other places. Insurance paid for it. The problem that I have is it was an all-day appointment. And so I had to, it was 4 weeks out. I got it rescheduled to 2 weeks out at a brand new service center. Took it over there, and they basically said, hey, here's an Uber ride, go home. And they held it for 2 days. Now, I don't blame the people. I mean, they're just overwhelmed with services. So, Harshita, I don't trade options. And I try not to suggest options. I can suggest direction of the market. And, I typically use momentum, not necessarily, options are, in my mind, just gambling. It's not investing unless you're placing hedges. If you're putting options on SPY because you have a significant portfolio that you want to protect on the downside, certainly put options on SPY are great. If you're just buying put options saying, hey, I think the market's going to go down, so I'm going to buy put options, it's gambling to me. I would say trade the trend. Right now, based on yesterday afternoon, the afternoon candle has a 1.53% movement, and you're above the 9-day, and you're kind of trading just on the upside of the Bollinger Band. At some point, options make sense. But why are you going to try and time the market? You could go up to 4,400 in this run. That's not out of the realm of possibility. 430, I mean, you got this gap right here, back from September, between 419 and 421. You're at 410. Why buy put options? Why? Yeah, smash that like button. Smash that like button. But again, trade the trend. And Harshita, if you're new, I'm not going to give you a direction. I'm not going to give you a specific, direction of SPY. Overall on the market, I would say trade the trend and look at that 50-day, look at the 200-day, look at the 21-day, and look at the 9-day. If you're doing put options and you're on SPY and you're trying to time it by the day or you're trying to time it by the hour and you're just trying to do that, probably not the channel for you. I know that a lot of the subscribers here do use options, but I'm not that guy that's going to say, yeah, let's buy some options and stuff like that. I don't trade options. The only thing that I've ever done was a covered call strategy. And it was a while ago, last year, I think early in the year, kind of when I started this podcast, to be honest with you, last year. It was a covered call strategy, and Fidelity helped me do it, and it was to protect Apple on the downside just by collecting the premium. Because and the only reason I did it was because I didn't want the tax event of actually selling the Apple shares at a while it was going down. So I put crazy prices on the covered call strategy. So, ADP, I went over ADP, dude. ADP is I did put it. I'll go over ADP. It's on my scan list. You got to cross up here. Zephin, you have TrendSpider. By the way, guys, if you're new, this is TrendSpider. If you don't have TrendSpider, there's a link down below. It's a charting tool. It is so much more. I'm going to have a video out, I hope, today explaining. I sat down with David Yoakum from TrendSpider, and we did an hour on what TrendSpider can do. This is an all-in-one trading platform. What you're seeing are entry and exit prices for this stock ADP. This is my algorithm. So this tells you when to get in, when to get out. For instance, the algorithm, and it's a safety thing. The algorithm makes you 29.5% on ADP over 1,000 candles. Buying and holding makes you 30%. The 29.5% is just a safety thing. It plays in this middle realm. You win 25% of the time. Your average win is 11%. So if you just stayed out of one of the losses, like for instance, this wasn't a strong move. You stay out of that move. This one, you had a gap. You were coming into earnings. Why are you buying into earnings? Well, you can buy right after earnings at like 242 if you think there's going to be a move. Don't buy into earnings and you gap down. Now at 226, you got this gap up here at 234. 1, 2, 3%. But ADP is a good company. It's just expensive. So there's a link down below for 25% off if you want it. But I'm going to start recording the podcast. So it is 2 candles per day, so it's 500 trading days. And there's about 275, 280, somewhere in that neighborhood, trading days in a year. Let me see. How many trading days? 252. So it's about 2 years. 252. So essentially the algorithm on 1,000 candles is 2 years. Just think of it that way. I kind of say that, but yeah. For me, a strategy of 2 years is good enough. If I take this back, and here's the thing, if you have a really good strategy, and this is a MACD strategy, it's not one that I would do over 7,000 candles, but 7,000 candles on this one, you make 268% versus buying and holding, you make 596%. Now, if you take a company like General Electric that has not been doing so well over 7,000 candles, let's see what the algorithm does on this one. It's testing right now. The algorithm, it makes you, here's a great example, 7,000 candles with GE. And you can see, I'll move GE to a monthly candle so you can see how bad it's been doing. But my algorithm makes you 197% versus buying and holding only makes you 24%. So it really depends on the stock that you're looking at. But my algorithm essentially keeps you out of that downflow. And it puts you into little smaller segments. But that's where it protects you, that downside. It overperforms in a bear market. It underperforms in a bull market. So you miss some of the upside, but you get out of the way deep downside. So that's the way the algorithm works. And it is super simple. And what's nice is if you get TrendSpider and you get my algorithm, what's super nice about it, most people have built their own algorithm, their own backtesting strategy. And you do need the elite portion. So if we go to TrendSpider and we look at plans and pricing, you need, and I just want to make sure everybody's aware of this, the elite at $780 per year, I get you 25% off with the DSP25 code. So brings you down lower than $780. I think it's like $500. And if I can't make you $500 in a year, well, with the algorithm and things of that sort, you just ain't doing things right. Let's get back to our default space. And I'm going to start the podcast now. We'll look at SPY, by the way, because SPY's a good one. And I hope I didn't lose too many subscribers by saying, hey, I'm not trading options. But Harshita, I hope, even though you trade options, I think you get something out of my podcast from a learning perspective. Again, we're long-term here. I've always said this. I kind of abide by it. More millionaires have been made by buy and hold versus trading. Day trading has bankrupted more people than buy and hold. So that's just my thought on it. Okay, here we go. Good morning. It is Thursday, February 2nd. It is day after Fed Day. And I got a lot of things to discuss with you guys. First thing I want to say is your boy traded MSGM yesterday. MSGM in the short. We were on YouTube Live, tried to flex my muscles and show you what I'm all about. I went big, went $5,000 in, I think at about 45. By the time I got out, it was an $800 loss. It halted. It kept halting. It reminded me of GameStop days where you were trading GameStop. I was hoping that it would halt up to about 80. It never did. It never even pulled the 50 lever again. By the time I got out, I was glad I got out because I think it dipped down to about 20. I think it wound up closing at about 30, and it is still there. I was going to roast Sherry about telling me about VS, but I will not because I have been wrong more than I have been right on a lot of these things. But I did want to go over short names and just a little bit of what I see. And I'll switch it over to, let me get over to Active Trader Pro so I can show you. Carvana is currently in a short squeeze. Carvana is still going in a short squeeze. This one is up here at 1740 right now is the bid and the ask. It closed at 1356. You do have volume in this one. 10 million shares in pre-market right now. So hold on. Something happened here where either my volume or my compressor went up. No, the gain's still at 0. Something happened. What did I hit? Something happened where, oh, I don't know. I'm hearing a huge volume increase. I'll just go. Okay, sorry. I hit pause because I thought I heard a big change in volume. So if you heard of big change in volume, my apologies. But Carvana does have the volume to continue the short squeeze. GNS is an interesting one because while this one still does have the volume to continue the short squeeze, this is one that Charlie from Zip Trader talked about last night. It seems to be putting in, and like I saw last night, you look at the 2-day chart of this one, it's putting in capitulation down here at 5. And pre-market, it exploded up to 7. That capitulation was just bound to happen. It's now putting in capitulation at about 7. I don't want to say that it will get back up to the 8 level because I just don't know. Is this one going to come back to 5? I just don't know. It's a short squeeze. What's interesting is the CEO followed Charlie on Twitter, and the CEO is all about hype. And he's been hyping about how he's hired certain people to look into this. So this one still has some play because he wants to find out short squeezers. Goldman Sachs and others were fined the last time they were found to be naked short squeezing. So he wants to go after them for that. The other one that I think is still in a short squeeze that could move is Bed Bath & Beyond. This one has 14 million shares traded in the pre-market. It is at 340. It went all the way up to about 410, it looks like, in the pre-market. As I look at the 2-day or the 5-day on this one, it definitely looks like it put in some capitulation down between 260 and 290. That seems to be where it's put, and then it bounces up again today. You could see a bounce like that, but the last time we saw this bounce was way back here on on Tuesday, it looks like, and it just capitulated. It moved from about $2.40 up to about $3, and then it just capitulated down and kind of has moved back up. You've got some room. But between those three, I think that's where you're seeing the shorts really sit. MGAM, which is another one that we saw short squeezed yesterday, it doesn't have the volume. 10-day volume, right, is about 14 million. You've only got about 2 million traded pre-market, and it's at 287. It just doesn't have a pop like the other ones do. So if you're playing short squeezes, that's my look at short squeezes. We'll go back to Safari, and we'll talk about the Fed. What happened with the Fed yesterday? Well, Powell's speech, he had every chance to break down this market. Every chance he had to break down the market, just like he's done before. And he didn't. This afternoon candle is a 1.53% period where you could have bought at the low at 402 and sold at the high at 413. That's an enormous move in a 4-hour candle for SPY. So you can see he basically moved the markets. Now the market's up. It's opened up 414. It might have a little gap if it doesn't pull back to 413. We are looking at probably higher because again, I think the worst thing that Powell said was that he doesn't see rate reduction this year, and he could have said that, but he followed right back up. The difference between previous Powell and yesterday's Powell was he followed it up with, I don't see it, but it could be a possibility if the data leads us there. So he's waiting on the data, and he could be behind the data, just like he said inflation is transitory. I want to make sure that everybody knows, too, inflation being reduced doesn't mean prices go down. It just means the percentage of prices rising has slowed. Prices going down is deflation. They want to protect against deflation because that wouldn't be necessarily a good thing, because making less money for companies is never a good thing. If they can just slow down the rate of costs, the rate of cost to consumers and businesses, if they can slow that down, that's what they're really looking for. He specifically said that labor was a huge concern. There are 1.9 jobs for every applicant. And I made a note, don't be mistaken. The Fed and Jerome Powell, he knows he can't do anything about that. He has some tools, but that entire job market is Congress's responsibility. And one of the main things that they have to do is get immigration under control. It's not the border. It's nothing of that sort. It is getting qualified workers here into America again. The Trump administration slowed down immigration, legal immigration, not illegal immigration. They slowed down legal immigration, which has affected the workforce because while COVID pulled people out of the workforce, Americans who basically retired, who maybe were at risk with COVID and said, I don't want to go back into work, and they just never re-entered the workforce because they were older, and they said, I'll just take retirement. Those types of things, it's pulled millions of people out of the workforce like that. Pulled me out of the workforce. And I don't want to say it pulled me out of the workforce. I left right before COVID, but I'm not going back. I'm not planning on going back. So I trade. I've got a good cushion. I've been blessed in life. But just so you know, Powell put that in. He also mentioned the Inflation Reduction Act and some of the infrastructure plays that the Biden administration has put in. That money has not been spent. That money is going to start being put in. Those jobs are going to be added. So you're going to be spending more money in this economy, keeping the economy strong. So I want to make sure that I say that because your boy made a bad trade on CAT. Weekly stock picks. His trade this week is CAT. I bought at 263. The algorithm has you out with a 7% gain here. I bought 2 shares. I probably will keep them. I don't anticipate getting rid of this one with the infrastructure deal coming. You do have this gap down here at 200. They had super, super strong earnings. So I don't anticipate myself getting out of that one. I also made notes, by the way, about Cisco and Nokia. So let me first go into Meta. And Meta's earnings, they didn't blow anybody out of the water. Make no mistake. These weren't, oh my God, these are fantastic earnings. Look at the chart here. And February 3rd of last year, $3.67 per share. Then you went to 272. And by the way, that 367 was where you saw the enormous drop and the gap that is now in play between 250 and 320. And that's 367 per share. Then you had 272 per share. And it continued downward, 246 per share, until October, which was just, holy shit, what the hell is Mark Zuckerberg doing? He's spending money like there's no tomorrow, $1.64 a share. You hit your low down here around 80. Then what happened was Mark kind of said, maybe the metaverse, maybe we split this out. Maybe we don't spend so much money. So what you saw yesterday was not a blowout of earnings, not a huge increase of crazy, user growth. What you saw yesterday was cost getting under control. He just pulled his lever and said, maybe we don't spend so much money. They also announced a $40 billion buyback. What's crazy about a $40 billion buyback is they could buy Twitter, they could buy Snapchat, and they could buy Pinterest with $40 billion. So rather than doing that, they're buying their stock. Now, they know if they went out and bought those companies, there's no way the government would allow that. There's no way the EU would allow that. They would get lambasted, so they're better off buying their own stock back. What was interesting was Stephanie Link brought up during the 60-minute Q4 earnings call, Meta brought up efficiency 25 times. Efficiency seems to be the word that they are looking for. So while I'm not buying this at 180 right now because I do think that it will pull back on the gap down to 150, I don't think that we're seeing 126 in the cards for this one anytime soon. If we are, load up the Brinks truck because they've shown, hey, they got 2 billion daily active users. They have Reels. They're basically incentivizing creators to create Reels for them. They don't care if they go on TikTok. They just want them on Reels as well. And people are using both platforms. The RSI right now is at 88. I wouldn't say that. Leading into this is what I wanted to bring up because today's earnings are Apple, Amazon, and Google. And one stock in particular that I think lines up directly with Meta and what their earnings could be is Amazon. Amazon on December 30th, our algorithm got you in at 83. Right now it's trading at 110. That's a crazy return on this stock. Make no mistake about it. Amazon is an expensive stock. The PE is 97. The forward PE is 65. It's up 25% year to date. That is crazy heading into earnings thinking, I'm going to buy it. And it's above the 200-day. The last time it was above the 200-day was during the August earnings where it gapped up. It immediately just started to fall down. And then in the October earnings, they basically said, hey, we're spending too much. Even though they earned more per share, they were just spending too much and they had to pull back their guidance. And that's what caused this. So where do I see this one going? I see this similar as Meta, except it's already had its run. I think this one probably gets back up here to about 124 if the earnings are good. Am I buying more? No. Am I selling? No. I'm not making a move on this one. The caveat that I want to point out, and I was doing this on YouTube Live a little earlier, and sorry to go over things again with the YouTube Live audience, but if I go to Cisco, and there were two stocks in particular during the 2000 bomb, in the year 2000, and Cisco was one of them. The other one was Nokia. And Cisco, this is a monthly chart of Cisco. And you can see it was trading up here at around $70 per share, April of 2000. It immediately fell. And for the next year, you just went down. Cisco was similar to what you hear about Apple. It was one of the largest holdings back then. It was a crazy, hey, the internet is running on Cisco because we've got servers, we've got all of this, blah, blah, blah. It was a crazy good stock to buy. Cisco paid for my college education. You can see 1996, it was trading at $4. You went up to $70. During that time, this was unheard of. This was not something that was normal in stocks. It didn't move like that. So that dot bomb was an enormous inflation causer. And then you saw the 2000 dot bomb, and then you saw 2011. But what I want to point out to you is there are some candles here. This is a monthly candle where this thing moved 12% in a month. It had its high at 24. It opened at 17. It closed at 19, but it went all the way up to 24. You had a candle here, 1 month, 7%. So you had big moves. There's one move here, 36%. You had big moves in this stock. Yes, it did trend downward. If I go to Amazon and I look at this kind of monthly chart, it doesn't line up exactly. If you think this is just a bear market rally where we've turned down, and for the next 4 to 5 years, we're going to be in this range, then Amazon probably is one of those that just kind of moves. You can see huge volume here. Volume seems to come down, price continuing to go up. This doesn't trade like it did back in June 2005, where it was just shooting up. Back in 2000, this was part of the dot bomb. But unlike Cisco, this one was trading at $3.74, and it went all the way down to 40 cents during August 2001. There were a lot of splits, a lot of things. It never really went down below $1. It was trading around 50, 60 bucks, but the splits and stuff helped this. Now, this has moved up since then to $110. But if you use Cisco as the example, Cisco was what the internet was built on. Amazon is what distribution is built on today. If you look at Cisco as the example, today, 23 years later, it still hasn't hit that high of 70. You're trading at $48. So it hasn't gotten back to where it is. My point being, if you believe that we are heading into a recession like Michael Burry put out one word tweet yesterday, right before the Fed announcement, and it said sell. 100% just said sell. He's since deleted it, but that's typically what he does. Doesn't mean that he's not all cash, but he said sell. He believes that we're in that bubble of the 2000s. I particularly don't. I think there's a lot of differences there. I think there's a lot more retail participation. I think there's a lot of different things that happen in this market. I just don't believe that the Fed, while you don't fight the Fed, I also think that the Fed has way more knowledge of what's going on with inflation. And we have way more metrics. Now, if you head into a war with Taiwan, with China, blah, 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 who knows exactly what could happen. But I wanted to bring that one up specifically because that's something to keep. I am not trading today. I am not buying Apple. I am not buying Amazon. I am not buying Google. I am sitting on my holdings. I am not selling. I'm going to look at the earnings. Some of those I will make a determination about after earnings. But Powell basically yesterday, you can think of it as we're at this Daytona 500 starting line. So think about it. At the Daytona start, you have a 2-lap race. Okay, he just waved the checkered flag and said go. If there's no crashes in the next 2, we're off to the races. So 2 laps. It's kind of the way I look at it. He just kind of said, hey, things are going to go good. Now, I do think you want to own bonds. I don't think you want to own bond funds. I was talked out of that by people who are way smarter than me in bonds. I was told to actually own bonds. And if you have Fidelity, I can teach you how to trade bonds. If you're interested in that, hit me up. I'll do a podcast about that again. But I do have a podcast about that before. So let me look at my notes real quick. Devin wanted me to go over, oh, you know what? Let's bring up Peloton. I brought up Peloton yesterday, and I said this one could move. It was up 20% yesterday. Crazy move. You got a gap here between 13 and 1350 that was created yesterday. You're trading at 1645. There is no volume level up here that it should be up here whatsoever. Your base is at 13. I think if you pull back to 13, I think it's good. The rumor, and it's all over the internet, is that Nike may buy Peloton. Nike or Amazon. Those are the two kind of bidders. Obviously, they can't comment on it. I don't know what benefit Amazon gets out of it because they could just basically create their own bike if they wanted to. They're buying Peloton for the instructors. Seems expensive for me. They already have their own streaming platform that they could put out classes on. But could it be a benefit for Prime members where you get a discount on the bike, on the rental of the bike? Could be. All good business ideas. Nike might buy them because they don't have a streaming platform. Peloton has a streaming platform. They could launch something that has a little bit more interactivity, that has a monthly subscription revenue, which Nike doesn't have right now. Could be a good business model for them. So I wanted to bring that one up. Another one that was flying was China, Baidu, B-I-D-U. This one was way up, 154. This one has just been on a crazy run. You had a buy-in here at 119. The 200 days at 113, there are gaps all over the place. I wouldn't get into this one, but their earnings are coming up on February 27th. So I just wanted you to be aware of that one. One that did announce earnings, Old Dominion Freight Line. Let me see. Old Dominion is ODFL. I wrote ODLF. ODFL. There's my dyslexia. Huge volume in this. And this is up at 374. Our buy-in was way back here in January. You'd think this was a tech name at 287. This one has a good dividend as well. It is 0.33%, so it's not horrible. It's not great. It's up 30% year to date. Its 52-week high is 374. You're trading at 370. So it's right up there against all-time highs. I don't think you get into it. Just bring it up because CSX is one that did seem to have a cross-up, and it's kind of similar in the transportation. And we'll go over our scans, but 3160 is the price of CSX. They just had their earnings, so there's no real catalyst for this one. You have a gap below the 200-day between 29 and 30, but at 3170, if this one is going to continue the run and the 9-day has just turned up and it's crossing the 50-day, the 21's crossing the 50 and the 9's about to cross it. So if you have a cross up here, this one could run. It had a cross up, and that's why I brought up Old Dominion. Energy names that I wanted to go over, one specifically for Jackson. Jackson wrote me on Instagram. He and I are kind of in the same situation. Our buy-in for Devon is about $60. And I always say 60 is kind of the pivot point on here. I hold this in a retirement account, so I don't have tax implications. And I probably should manage this one better because this one went all the way up to 80 back in November. It has not gotten up there, and the last 4 trades have been negative. The last trade, though, was positive. It got you in January 6th at 61.17, got you out on January 31st with a 2% loss. I have just been collecting this dividend and being happy. My average price is around, like I said, around 60. I do own a good amount of it, so I don't necessarily need to dollar cost average anymore. So the question is, should you sell out here? Their earnings are February 14th. Kiss your bride for February 14th. Kiss your DVN, your Devon Energy. It's got a big dividend. What is it, 6 or 7%? It's the highest dividend on the S&P. It's 8.35%. So while I say, hey, 60 is the sell point, I don't know that you want to sell it. Remember, Exxon had record profits. Chevron, record profits. This one's kind of floundering around, not so great. This one has a little bit more exposure to natural gas than Exxon or Chevron. So natural gas coming down, you guys know Boyle and KOLD. Boyle has just been an absolute rock down, and KOLD has just been a solid rocket up. But Devon's down almost 1% today at 61.40. I'm holding it. I mean, honestly, God, Jackson, I'm just holding it. If we're down in the 50s, I think I might just add to it. The energy's just, in my mind, there's a supply and demand problem with energy. There is more demand than there is supply in a peak economy. What's been keeping this down is the word recession and the government intervention into energy. OPEC is about to cut their production, so oil prices should start to go up. They've just been kept down. So I don't know that that it makes sense to sell this, because what are you going to do? You're going to sell it and then kind of buy back in? Are you going to time it? I've never been good at timing. So I just don't think that it's an opportunity to sell. Honest to God, the algorithm has you out. If you take a profit, you might miss big earnings in 2 weeks. It's kind of the way I look at it. Meta, we went over the earnings. NVIDIA, I wanted to bring this up because they crossed up again. It's a secondary cross up. It's up another 2% today. This one, excuse me, we've been in since 147 on January 4th. It's at 213 now. I mean, that's a crazy, crazy run for this stock. It's still expensive. Their earnings are coming up on February 22nd. I would completely expect them to have blowout earnings like AMD did. AMD is on a legendary run as well. A couple more gaps in this one. This has moved December 29th, 64.86. We're at 85. It's a 30% move. And you've still got upside because you're way outside the Bollinger Bands on the upside of the 9-day. You do have some volume support on this one. If I pull it back far enough, you have volume support here at about 77 because most people who are holding it here at 100 were smart and got out, unlike me. But yeah, I kind of like that one. So I wanted to bring up NVIDIA. D-Man, next one he's looking at for summer and spring is a Home Depot main supplier, SMG. Let's look at SMG. D-Man brought up J-Weld, which is the Windows, and he's done really well on this one. Scott's Miracle Growth is SMG. And this one, December 27th was the buy-in at 47. You're at 82 right now. As we head into summer, this one typically, I mean, if you just look, we'll just look at a monthly chart on this one because you can probably look at a seasonality of this one. In fact, you know what? Here, this is seasonality of Scott's Miracle Growth, and we'll go back to, we can go back to February 1992. And so in the month of February, you only have 35% winners. That may be because January is one of the best months at 65%. So my mind with this seasonality and this chart, if we just run the algorithm on SMG, I would say wait till you pull back to the 200-day. You did have this golden cross of the 50-day over the 200-day. So you are in a current kind of, bull market, if you will, on this one. Everything's kind of moving positive. Let's look at some of the fundamentals on this. SMG fundamentals. They're not making money. Their target price is $55.88 from analysts. They do have a 3.28% dividend. Year to date, you're up 71%. The last Truist said, hey, they moved it to a hold. It's a neutral, but they moved their price target from 50 to 70. You're trading at 83. So Yeah, they beat their earnings estimates. Probably not a bad idea. He says he's waiting for, D-Man says he's waiting for a pullback to around 60. Probably pretty good play. But if they start turning a profit, this is a $120 stock. So it's kind of the way I see it. Shell announced record profit. This is an English company, English oil company, Royal Dutch Shell. They announced record profit. Same thing as Exxon and Chevron. They're just getting kind of held down here. 58.46. The algorithm doesn't have you in, but again, energy, huge one. Okay, I wanted to bring up Apple because some folks have been saying I'm in too much love with Apple. And if you think Apple has had a crazy good run, Apple year to date, let's see, what's it up? 20%, 14.68%. So it's the largest single stock that's held in the stock market. If you think that earnings are going to be bad, AAPU. This is a 1.5 time, this is a 1.5 time bull on Apple. Bull. This one, you had a buy-in here January 4th, 1613. You're up 40% to 2029. Crazy stock move. It just started its 200-day. It's a brand new stock. The RSI is super high at 69, but again, these are we can look up. Let's see, Apple Bear ETF. Let's look at the Bear ETF. AAPD is the bear. So AAPU is the upwards, AAPD is the down. So if you think that what I noticed was AAP, and the reason why I put it in here, AAPU is seeing huge volume spikes. Now AAPD did have a buy-in here at 27.39. You're trading at 26.28. This might be good for me to buy as a hedge against my Apple shares, just in case. Am I buying this one to outright just, if I don't own Apple, am I buying AAPD? No. You'll get burned on a lot of this stuff. Now, the RSI on this one is 30. Buyers do have to show up, but I'm just not seeing the volume that I am in AAPU. So I wanted to bring that up. Merck beat, and this is one that has been on just a great run. They beat on earnings per share and revenue, and they guide in line. Today, the period candle is 1%. It's trading at about 105 right now. I would expect this to be a buy on the algorithm on this candle. Probably in the afternoon. It's going to trigger a buy on that candle at about 105. Now, you're just getting out of this one with a 25% gain. The algorithm over 1,000 candles, again, that's 2 years of trading, is 57%. Buying and holding makes you 46%. Your average win on this is 5.6%. I believe that when you look at the long term of this one, I think Merck is a really, really good opportunity. At 105, you are close to your 52-week highs. I wouldn't necessarily think that that's a horrible thing in healthcare, specifically in biotech like Merck is. They're a drug manufacturer. They have a good stable of drugs. I think you're fine. Your PE is 17. You have a dividend that's 2.73%. Year to date, you're down 6.35. So you're just pulling back. And again, they made $1.62 per share. Their last one was $1.85. It is going down, but they guided in line. So earnings came down. The expectations came down. It was right in line. That's why you're seeing the pullback. And this is in our core portfolio. So if you wanted to buy in, I think that today might be a good buy-in at about 105. If you can get it around 100, if for some reason something starts to pull back, I think that's a good one. Honeywell, and they missed on earnings. It's got a nice pullback here, and the pullback, they're trading at about 201. If you can get this under 200, I think you're doing okay. The earnings were $2.52 per share, which was below expectations. The RSI is around 36. This is a really good company. It's run well, and you've got some pretty good earnings. The PE is 26, so it is a little bit expensive. Year to date is down 6%. Dividend is 1.99%. 52-week range is between 166 and 120. I think if you trade this under 200, you'd be okay. There is a gap here at 190, which if you close below 200 today, I think 190's in your eyesight right there. Do I think that we're getting back to the 170s? I don't think so. I mean, again, 2020 is hindsight, but the 200-day, even on the weekly, is at 188. So, dipping below that 200-day, you've only done that in October and July of last year. Do I think we're going back to those kinds of levels? I personally don't think so, but you know who does, Michael Burry. Zephan wanted me to look at Arch. This is a coal company, and he wanted me to look at because I think somebody posted, I think it was Tom posted, that there's a dividend, or Tom expects dividends, and I had to remind Zephan, rule number one, do not listen to somebody on the internet. Specifically me, specifically anybody in our group. Nobody knows anything unless they have insider information. And if they have insider information and you're trading on insider information, you're doing illegal shit, and they're going to come after you. Trust me, as a guy who's been investigated for insider information or at least questioned about it, you don't want to be in that situation. It's a little bit intimidating. But Arch, it is well over its 200-day. Which is the 200 days at 142. It's trading at 149. Heading into earnings, their earnings are coming up February 13th, so the day before Valentine's Day. So we can't really give it a kiss because that's sacrilegious. But the 200-day, when you're under the 200-day, it tends to go back over the 200-day. The 200-day is right now at 142. This is a company that coal companies just through this, ever since 2020 have just been on a run, and China can't get enough coal. So Arch is probably selling a ton of coal to China. I don't know much about this company. I would say it's run. And when you look at the dividend's 0.66%. Now your 52-week range is 87, which is your 74% above, and you're only 5% below your 52-week high of 160. Year to date, it's up 6%. Performance for 1 year, you're up 71%. So it has performed spectacularly. Your earnings per share this year expected to go down by 24% because coal was so expensive last year. So again, if China opens up and if they start mining a lot of their own coal and they do a lot of things, Arch may be in a little bit of danger. I particularly won't necessarily. I invest in oil companies. I got a little bit of thing about coal. There's no such thing as clean coal. There's no such thing as clean oil. There's no such thing as anything that's good. But you can see what drove this was the volume. And where's the volume going? It's going down. Does coal come back? I don't know. I mean, I'm all in on oil and energy, natural gas being still a boom this year. I'm just not sure of coal. There's too much pressure around the globe to kind of push that down. And at 52-week highs, am I assuming that this is going to new 52-week highs? I don't know. Cross-ups, we talked about Merck. We talked about NVIDIA. We talked about Meta. Another secondary cross-up that is on our core portfolio list, Qualcomm. This one's just been a beast. The buy-in here was December 30th at 107. You have your earnings coming up today after the bell. So if you're in this one, I'd hold it. You do have a gap down here between 123 and 126. So if they even announce some type of hesitation like Intel did, then you'll see probably that gap get filled. Buy it. I mean, it's going to get pulled back at some point to this 200-day. The 200-day is just starting to turn positive. On the 4-hour, you have the golden cross. And that
that just happened. So I do think that you have move. Now, on the daily, which is where the typical quote-unquote chartists look, you haven't seen the golden cross, and the RSI is up at 68. I'm not buying this into earnings, but I'm certainly not selling this with that secondary cross up. Another one that is in our sector spiders, XLK is one that is on the spider list, and this is the technology spider. It's got a big move, and part of that big move is because you have Apple up 2%, you have Amazon up 4.26%, you have Google at the time when I'm now recording up 5%, and Meta is up 18%. So this one has just been a huge move for an ETF. It was beaten down 123 on December 30th, and you're at 141 right now. But it had a secondary cross up. Another one that I particularly own is an iShares Expanded Tech ETF. This is kind of a similar one. It's IGM. I don't know. I think I bought IGM because I couldn't buy the spider sectors in Merrill Lynch, and that's why I moved to Fidelity. And I just transferred over IGM, and I never have traded out of it. But IGM is trading up at 331. Same thing as XLK, just a secondary cross up. One that I think might be a good one to get into that's been beaten down and has an opportunity as it moves over its 200 days, PayPal. PayPal is trading at 85. Their earnings are coming up February 9th next week. This one could be a, Venmo. I know you guys tip me on Venmo a lot. And remember, when you make money, treat me like your bartender. And on, February 14th, consider me, like I told, who did I tell? Somebody, I said, somebody told me Melly is sponsoring my podcast in Mexico. And it was on the Facebook group, and I said, ooh, that moves me from basic bitch up to international bitch, exotic bitch status. So February 9th is the earnings on PayPal. It crossed up. It's a secondary cross up. You have a gap here between 71 and 72. You're trading at 85, but it's over its 200-day. So that gap gets less important. The more important gap now is between 88 and 89. Their earnings are going to be huge. This is a company that has not been doing well. This is a company that has guided just horribly, and their management has been horrible. But it's an interesting play. Growth, Vanguard Growth, VUG, had another secondary cross up. This one's just kind of hovering around there. The RSI is at 75. It's super high. You just want to make sure that, if you want an entry into this one, I would wait for a pullback. Honest to God, at 244, you've got this gap here between 244 and 248 that's probably getting covered. But long-term, these Vanguard indexes are long-term. I think you just wait. You got that golden cross happening right now. Again, everything in this market points to things going up. One that I really, really like, and I like it more at 24 than I like it at 30, Uber. So there was it's interesting because Uber, I didn't realize this. They have something like $30 million per quarter in advertising revenue. They put ads on their app. I don't use Uber a whole lot. I really don't. I use it sparingly. But from a travel standpoint, American Express said travel is up. Uber is the preferred travel. So when you get to an airport, why wait in the taxi line? You're taking an Uber. You're getting on your phone while you're at baggage claim. You're calling an Uber. You're going to a game. You don't want to pay for parking. You take an Uber. You're going to the airport. You take an Uber. So I think Uber, I would prefer it under 30. There's a gap here between 27 and 26 that is under the 200-day. You're covering this gap up here at 33. That's the gap that I think I see right now that's getting covered. I just, again, it's moved so much. It's hard for me to say not to buy it here because I do think there's a whole lot of opportunity in Uber. And I think they're making their changes to turn it around. And I like the company. But, again, it's just run so much. Another one that has run a ton is Rocket Mortgage. This one, we had our buy-in here at $7 on January 3rd, and this one's up at $10.49. I bring this up not because I think that Rocket Mortgage is doing anything incredible. It's just the run, and it was brought up, and their earnings are coming up. Now, we all know that, DRV and DRV is the, DRV is the real estate bear, and DRN is the real estate bull. The real estate bear had a cross up and an exit, and that was back on January 30th, and that's DRV. DRN had a cross up right before that at 12.19, and you're at 13.70, and you're moving. It's a good move for that one, and that's the bull. So if the home builders are moving at an all-time high, fast pace, they're selling more, and mortgages have been, kind of on the rise. Rocket Mortgage might be a good one. Very well might be a good one. Another one that might be a good one, and I've got just a few more, but Coinbase, and I know I've gone a long time today, but Coinbase, crypto, it's going crazy. 35.19 here, December 23rd. You've doubled your money. You're at 72. Welcome to Neverland. You're up above the 200-day. There are gaps up here, about 82. You could cover. I think it goes all the way to 86. You could cover. At one point, was this a $400 stock? Let's see, Coin. Let's go over to FinViz. And Coin was $217, and you're at 73. It's not making money. There's no dividend. Up year to date, 108%. Crazy good move. To go along with this, I took a look at, and it's not a cross up. Coin had a secondary cross up, Mara. And I took a look at Mara, and Mara had this cross up at 390. You're not out. Even though the MACD's crossed down and it's moved down here, and you're at about $8, $8.04, you're not out. And you've got another move that looks like it's coming. It's not another cross up because that 390, you're still in. You've doubled your money. You're at $8. Take the money off the table, buy back in with your profits. Take the taxes out, make sure you have enough to pay your taxes. Just buy back in with the profits. Then if this thing goes to zero, you're not out any money. You just lost your gain. You're not out any money. But crazy good move. Merck, we went over. ADP is one that I got a cross up on. This is one that it's 226.67 is the cross up, and it's trading right around there. ADP is a little bit expensive at 30 on the PE. Year to date, it's down 5%. It's got a 2.21% dividend. Their earnings, they've already had their earnings. They dropped on earnings. There's a gap here between 233 and 236. You're below the 200-day. It's a good company. Their ex-dividend date is March 9th, so you got some time. It's crossed up below. The RSI's at 43. It's not exciting, but it's not boring because I think it's, it could make you money. We talk about it all the time. Wells Fargo is a great example. I have not brought up Wells Fargo, but when I bought it? When it dipped down here to 40, I think I got in at 41.50 or something, and I lost money. It went all the way down to 40, but you know where it is today? 46.69. I don't talk about it much, but the long game makes you money. So ADP is one that could go there. ISRG, Intuitive Surgical. This is one that already had their earnings, so the catalyst is pretty much gone. What they announced on their earnings was that a lot of their slowdown and forward growth restriction was because China had such COVID that there was no optional surgicals that were scheduled. That's temporary. So if you look at a weekly chart of this one, and you look, it's just at its 200-day, it's probably going back to 337. I mean, honest to God, the only other time where it broke the 200-day was COVID, where people couldn't have their operations. And then through 2022, it just sunk down. You do have some volume shelf at around 226, but at 250, I mean, you could buy it. There's volume above it. It could absolutely get pulled back. Now, what you want to make sure of is that 50-day doesn't cross. Make sure you have a stop on this one. Make sure you have a stop. Another one that I said buy under 300 and is now at 317. You've almost made about 5%. And it's had another cross up is Lululemon. It got down here right after their earnings or they announced or something to 289. And I said, under 300, you should buy it. Did your boy buy it? Hell no. I don't wear these pants. This is way outside of my lifestyle. I'm an Under Armour guy. I probably would buy these and never buy another thing again other than Lululemon. So I'm a little bit afraid to even go into the store. It's under its 200-day. You got gaps all the way up here, 350 to 373. Other than that, I don't see any reason why this wouldn't cover those gaps. They've got inventory problems, but this is a really well-run company. So that's going to do it for all of the scans and things. Again, today is kind of like yesterday, except you just don't have Chairman Powell. We've run a lot. So be careful. Make sure you have your stop losses. I gave you some ideas in this. I may get off here and trade some Carvana. I may do some fun stuff. But if you have any questions, hit me up. If you made it this far, rate me. Just hit that 5 stars on whatever podcast you're listening on. If you've made it this far and you just want to make a gentleman's agreement, you don't want to give me a tip, but you've made some money, just head over to YouTube. The link is in the description in the link tree. Head over to YouTube and hit subscribe. If you want to join our private Facebook group on that same link tree, there is a Facebook logo. Just join it. Join our Facebook. I keep it private so that there's not a lot of spam, that there's not a lot of craziness that goes on. I've had to remove a couple of people from the thing just for posting like crypto stuff and stuff like that. So keep it civil. I am the end all be all of that. And if I block you and it's by mistake, just shoot me a message on one of the other platforms like Instagram or Twitter. You always have contact with me, but I will tell you most of the time when I'm banning you, there is a reason. I usually have like a 3-strike rule. So, but if it's clear that you're a bot or something like that, yeah, F you. You're ruining our internet. But again, hit me up on any of the platforms that you want. I'm going to be on YouTube for a little bit. I got to get off because I do have Tesla coming. One thing that they do right is they come and do service at your house, which is fantastic. So join me, by the way, on Webull. Let's do a Webull. I am trading $1,000 on Webull. I am at $1,089. This is where I've lost money in CAT, where I have held on to SQQQ way too long, but I do hold the largest position is Apple. They gave me a couple of shares of Apple. I also bought a couple of shares of Apple. Kraft Heinz, Procter & Gamble, and Gap is what they've given me. So, but CAT, SQQQ, and Apple are the 3 ones that I bought. So I'm down on 2 out of the 3 that I bought. But I am donating whatever proceeds I have to charity at the end of the year. I'm hoping to have a good amount of money to give to a charity, a smaller charity, not a huge charity. But it will be something, if you want to join me, the link is in the description. You get free stocks when you join. So just be sure to use the link because I think they give me something too. Other people have joined and all of a sudden I have additional shares in my account. So if you have any questions, hit me up. Thanks for listening. See you tomorrow. Oh, tomorrow's going to be a summary. Remember, Fridays are our summary. So hopefully we have a good news of Apple. And, if your boy's up on Apple, he's going to be happy tomorrow. If your boy's down on Apple tomorrow, expect some airing of grievances. See you later. Okay. Export song to disk. That was a long one. Dude, that was 53 minutes. Now I got to go read your comments. Nobody commented a lot. If it's a daily chart, 1,000 candles, 1,000 days. If it's hourly, it's just past 1,000 hours and so on. Carvana's halted. Al, I got out at open at 1776. All is good. Fantastic, John. Mullen getting some volume. Hey, William. Let's look at Mullen. I'm going to move you over to Active Trader Pro because we got Carvana up there. And I think I have to restart. Do I have to restart Active Trader Pro or is it moving? Bed Bath & Beyond, I thought, or GNS, I thought was the best opportunity today for a short squeeze. Yeah, Bed Bath & Beyond, if this candle is real, doesn't look like it's real. Active Trader Pro is not moving. Hold on, I'm going to restart it. No. For some reason, Active Trader Pro on my computer when I'm running OBS. Larry, awesome. Good deal, Larry. I think you got, 14? And you're at like 16 now? That was a great buy. I wish I was, listen, if I didn't do this damn podcast, yeah, Carvana's just a gamble. 100%. Sherry, you just summarized 53 minutes of a podcast in one sentence. That's how chatty I am sometimes. Let's see. I have a new message from Tesla. Delete. 7199. Yeah. And Sherry, by the way, you're not the only one. Oh, man, come on. Has crashed. Does that mean it's not going to open? I guess not. Ooh, it is going to open. It is going to open. Let's see if it works. What's new in Active Trader Pro? Notebook changes. Symbol search. I think the Windows shell. Sherry, you're not the only one who just uses Uber daily and has gotten rid of their car that I know, and that's why I'm so big on Uber. And you'll know this, Sherry. The Uber app. I want to say the Uber app. I haven't seen advertising in the Uber app. I should say significant advertising in the Uber app. But when I read how much advertising they have, and then I thought about it. So when you install the Uber app and you have it running in the background, if you give them access only while using the app, and I'm talking iPhone, Android, you guys are in your own freaking world because you allow access to absolutely everything. Google doesn't restrict a damn thing. But in the iPhone, if you give them access all the time, they have access to all of your data. Let me see what a little powder sounds like. I want something a little bit more. I don't want calm. It's too cheerful. I'm going to bring that one up. Insert ad. I'm uploading the podcast. Wow. By the way, Sherry, FFIE up 15%. If I knew that the answer to that one, Christian, here, what I'll do is, here's what I'll show you. Bum, bum, bum. SQQQ. And I don't know, Christian, if you have access to TrendSpider or not, but look at SQQQ. Got you in at 40, got you out with an 8% loss. I'm currently sitting here holding at 46. What's the point in holding on? I mean, honest to God, in my mind, there's no point in holding on. There is no reason to hold on and hope. Sell it. You know, what's the point? These are triple levered ETFs. At some point in time, at 23, this gets, RSI and the MACD down that low. It moves back up. But buy back in. Should have sold down here. Why in the world would I think that this one has a chance of coming back? That's just 2 days. I mean, there's Wednesday. I'm sorry, there's Tuesday. There's Wednesday. Here's Thursday. What gives me hope? And you're talking to a guy who owns a couple of shares of this. I'm down in my $1,000 account. This is losing me, a good amount of money. Yeah. I'm holding just because I'm in the pattern day trading thing, the PDT. And so I already have 3 trades this week. So if I were to do a 4th trade, I'm completely locked out. And I probably should just get out. Honest to God. Even though, it would be my 4th trade. But I think I'm locked out for a couple of days then. So that's the only reason. It's just a matter of, it's a small account and I'm holding it. And I shouldn't have gotten into it. It was just a bad decision on my part to get into it. Oh, I'm sorry. I didn't even show you this. There's the lovely chart I was talking about on here's Tuesday, here's Wednesday, and here's Thursday. And you can see when the Fed talked. TQQQ was the one to hold when the Fed talked. But the real answer, Christian, I'm a fucking moron. Sorry for the harsh language. I don't usually curse on here. I cursed a lot in my personal life. I don't usually curse on here. Oh. Yeah. He's had that, by the way, sometimes. And maybe you guys haven't followed me all that long. I mean, I've been following him for a couple of years now on Twitter, and I just got to know him. Last year, he listened to my podcast when I started it back up. I think he listened beforehand, but I really started it back up last year in January. And I think he listened to one, and he's like, dude, what's your algorithm? And so we started talking back and forth about what each of it, because he has his own algorithm. And his algorithm is based on momentum of Dow. So remember, he's only got 30 stocks to choose from. And it's a momentum-based algorithm. And he typically has 2 or 3 of those 30 to choose from by the beginning of the week. And so he makes an educated guess. And I didn't talk to him as to why CAT was in there. But I knew when I bought it this week, I knew I was getting it into earnings. Yeah, exactly, D-Man. I even wrote to him. I said, I don't feel good about buying here, but I'm in support of your channel, so I'm buying it. His whole thing, if you look at, he's very transparent about what he buys. Even on his options plays, and he's super transparent about it, and his results. But he sizes, and I know specifically with options, your size matters. I should laugh at that one, but inappropriate. Size matters. 100% though, size matters on that one. This is gonna get me killed though. As far as the amount here. So I'm going to take this out. I'm going to take that out. I'm going to take those out. I'm going to take that out. Powell's speech. I'm going to take out a lot of this. So that I can put in other stuff. I'm going to take out Carvana there. NVIDIA I'm going to take out there. D-Man, I went over your SMG play. Pins, snap. Sherry, I drove in my, it's ironic. I had, the last time I used Uber was to get to the Tesla dealer to pick up my car. And it was a Tesla. And so I talked to the guy. I said, it was a Model 3, brand new Model 3. And he said he got it because there was a special incentive. And so I said, do you like it? He goes, oh my God, I love it. By the way, if you haven't, hit the thumbs up button. I see a bunch of people in here now. Hit the thumbs up button, even if you're just listening. And do me a favor, subscribe. Just hit the subscribe button. I'll take my shirt off for those who subscribe. I'll take a hit of the vape. And I need better color. God, this color on this thing looks horrible, by the way. I need a better camera. I should probably hook up my my GoPro or something. Okay, let me see if this will do. Let's go to Anchor. That's the only reason Mike tunes in. Mike, you're waiting for the day where I just show up in my my little shirtless sleeveless t-shirt and I take a hit off my vape. No. And I should say, let's see, sponsored by Visible. Notes. Copy. There we go. And I'm going to bring in GNS. clouds. I looked at D-Man, just so you know. Here. Let me show you this. Before I... Actually, you know what? Let me finish this episode thing real quick. What am I going to title that episode? Short squeeze plays the Fed and tech earnings tonight. What should you do? Let's see. I'll put this in. 1/2/23 market update. Okay. Published now. Okay. Let me show you this. And I'll get over. D-Man, you watching? Let's see. It is SMG, I think, is what you wanted. It's Scott's Miracle Grow. D-Man, watch this. So this is Scott's Miracle Grow. On the algorithm, you have buy at 47. Fantastic. Unbelievable play. You've almost doubled your money at this point. Great play. Golden Cross. Everything's going well. I agree with you that the pullback would probably be about 65, between 60 and 65. I think that's right. You've had your earnings, so there's no real catalyst here. Now, here's where TrendSpider gets really good. So this is 31 years. 31 years of data by month. 65% win in January. That's its third best month. Okay? What's crazy is October, November, and December are the best months of the year. Completely what I wouldn't expect. Although when you think about it, Scott's Miracle Grow might be better used in the winter by homeowners rather than in the summer where you have Monsanto kind of, fertilizers for the crops and stuff. So, or farmers may be buying here in the winter to use for the spring and the summer. But it's clear what's scary about that particular chart. Remember, February's only got a 35% win over 31 years. And you're heading into February at this high. So I would tend to believe that you'll pull back here. You've got this gap down here, and they filled it on the way up, but it doesn't mean that support level right here between 60 and 65 isn't going to be a pretty good pullback. If you drop below that 200-day again, I think it's all in. I think I looked at the weekly on this one too. Yeah, I mean, even at 83, your 200 days at 131. Look at it before COVID. Nothing's really changed since COVID in Scott's Miracle Grow. So, see, D-Man, this is the shit that goes on. I'm going to blow your mind. When I post the video later today of my talk with David Yoakum from TrendSpider, I think it's going to blow a lot of people's minds. I really, really do. I think it's going to be eye-opening, and I think a lot of people will sign up for TrendSpider. It's an unbelievable program. By the way, Apple going for the 150 mark. You want to talk about a good move over just a couple of days? Look at that. And this is the largest stock in the stock market. ARK is up 5% today. Your boy doesn't have anything in ARK. Title, The End is Near. No, I titled it Stocks to Buy Now. That seems to be a crazy good title. Stocks to Buy Now. But I've got quite a bit of editing to do. Sponsored by Melly. Carvana, I've already gotten there. So TrendSpider, I don't need that. I don't need that. Peloton. I'm going to say Cisco because I looked at that one. Meta is already in there. We're going to keep those in. And then SMG. We'll keep SMG in. Oh, here. We're going to tweet. And then we will tweet this out. Let's put in APD. And then we'll start putting in some of this. Para. Merck. Honeywell. Okay, we're going to put in SPY and other ones in here. SPY, QQQ, TQQQ, SQQQ. We'll put in Tesla, God. Imagine being the person who thinks you should get out of Tesla. Or being like Zephin, listening to somebody say short Tesla. AMD. FFIE. Put in SOFI. I'm done. Okay. Tweet. Okay. What was I gonna show? I was gonna show somebody something. Friday recap. See you, Sherry. Have a great day. Palantir has an engulfing candle. Let's look at Palantir. I'm going to move you over to Safari. That's the monthly, by the way, for Scott's Miracle-Gro. Palantir was a buy when I sold it at $6.46, and now you're at $9. This has just been one of those, crazy moves, and you got their earnings coming up on February 13th. You're up above the 200-day, but here, you don't even have a 200-day on their weekly, but it's just touching the 50-day. Expect that to be a resistance level, because look at it back here. I mean, it really doesn't have a lot of data to go back on a weekly, but your RSI is at 56. Your MACD is still down below. But I would think Palantir would be a good one. And Mike, I titled it Stocks to Buy Now, Short Squeeze Plays, the Fed, and Tech Earnings Tonight. What should you do? So I didn't go the full Charlie route, Mike. I didn't go shirtless taking a hit off my vape. I tell you what, and D-Man, this is one you might want to look at because you like pullbacks and stuff. $60 on Coke. Come on. I love my sugar drinks. You got February 13th earnings coming up. You don't think these guys are going to kill it on earnings? You don't think they're pulling back on their spend? You don't think that these guys have their shit under control? Come on. Gold mine, isn't it GLD or something? GDX is the Vandex gold miners. It's been a great, listen, from 29 to 32 on this ETF. I fear this gap right here between 29 and 30, especially with that red candle right there. Right now you're in a 2.64% candle. It's a big candle on this one. That's a big candle. And you got the MACD going down, the RSI's going down. At 32, I think you got this 29, high 29s here in your sight. Now you do have the 200-day moving up. The 50-day might provide you some support level at 31. But the 9-day is clearly just moving down. You got that button hook here. The algorithm hasn't gotten you out yet, though. The algorithm won't get you out until the moving averages kind of tells it to. So, yeah, I got it. Oh, Home Depot's up 3%. Microsoft up 3%. Intel, you want to talk about the overreaction? Where is INTC? Look at INTC. They announced earnings. They were down here, and I said any reaction in the market is an overreaction. 26.78. You're up 10% from earlier this week, and this is a company that is doing horrifically. And their dividend is coming up. I need to call my dad on this one. Hey, it's almost at 30. Sell it. Because see, right here, this engulfing triangle right here is at 30.38. Sell it at 30. Throw your money on a pullback. Yeah, Snap. Snap's earnings, all they said was advertising's coming down. Meta shows you it's probably not, an advertising thing. It's a cost thing. And Snap is probably going to realize that. They haven't announced layoffs. Snap hasn't. So expect a layoff announcement. I don't know. Let me see. Yeah. I mean, dude, look at Meta. Meta's at 188. I mean, that gap today between 155 and 180, that's coming into play. I ain't buying today. I ain't selling today. Do I own Meta? I don't know. Let me see. Let me log in and see. Do I own Meta? I don't. I sold out of Meta. I think I only had like a $5,000 position, if I remember. Maybe it was $2,000. But I'm not buying today. Are you crazy? No. Today, if you're buying, you're just risking your. Look, Apple's at 150. I mean, take a look at some of these stocks. Apple's at 150. TQQQ, you could have gotten at the beginning of the week at 19. You're 26 right now. Are you kidding me? 30% in a week? All right, let's look at a 5-day chart. Look at that 5-day chart. You dipped down here to 21. This was, let's see, Wednesday, Tuesday. Tuesday, you were at 21. You're up 20%, 30% almost in 2 days? Come on. It's a little stretched. Honestly, if I go back to Meta, I'll show you. If I go back to Meta, you're gonna be shocked at this, but by the end of the year, you're filling this gap up here at 321. Honest to God, you're filling that gap at 321. Yeah, Christian, I mean, there is no way there's this much good news in the market. Things didn't change overnight that drastically. So you've got people basically banking into these things, and you wait for a pullback. Doesn't mean that we're not in for some good times, but you wait for a pullback. Don't buy into this at all. I'm not buying. In fact, I may sell. That's probably not a bad idea. Hold on, let me look. Let me look to see if there's something that I want to sell on the rally. I don't think that there is. I hold my stuff pretty tight. Hey. And you want, this is what's funny. Here, while we're looking at Netflix, or we're looking at Meta, this has been the leader, and it's kind of taken the week off. Not really, but look at that. I mean, 290 to 360, 20% move, but this is a 4-hour chart, so let's go back to earlier this week. 30th. Here. This hasn't been up big. Yeah, I'm not calling an end to the rally whatsoever. I just don't think you buy into it. I don't think enough has changed that risk is off the table. I look at names, I'm looking, and this is why I love TrendSpider, by the way. The core portfolio, which I share with anybody who wants it. I'm looking at it. Boeing, down today by 0.1%. You look at Cleveland Cliffs, completely flat on the day. Nothing has changed. Devon, this was down 1%. It's up 0.4, it's down 0.4 now. So it's come back. J&J, which is in the middle of $1 billion freaking lawsuit. This one's flat on the day. Coke, it's down 1% to $60. I would bet that 60 is kind of a floor. I think, if I sold some Coke, I'll probably pick more up at 60 because it's one that you just buy and hold. Merck, and I can buy and hold it because I took a gain on it, so I could have bought and held it. But at 60, I'm waiting for this one to give me a buy on the algorithm. Did it give me a buy today? No, 60.51. I didn't necessarily believe that 60.51, but you did ride it up to 61. I'm not crazy about it. I'd rather buy it under 60. I may put a buy in for under 60 on that one today. I'm looking at Merck. Merck is down 2% today. It's coming back down to that 101. Back down to that probably 200 day. Is where I would expect it to be. Oxy, down almost 1% today. The algorithm has you out of this one with a 2% gain. Probably should get out of it, but it's under the 200 day. It's using that 200 day as resistance at 66. It's probably where I'll put in my sell on this one. Pepsi, same thing as Coke. Pepsi's just got this gap down here below, which I haven't trusted. But at some point in time, it goes there. Pfizer has just been a dog. And I own a lot of this, and I probably should just be out of it. I don't like their tactics now that I look at it. UNH we talked about. This was one I got in at 485. Today, it's down 4%. It's because risk on rally. And the reason this one's down so much, take a look at the weekly on this one. It's just moved outside of this triangle. But that 200 day is way down here, 378. The only reason this one's down is because it's moved so much. So there's no reason to kind of, it's a small position that I have, but it was up over 500. I said over 500, sell it. Under 400, under 500, buy it. So my bet on that one. I look at XOM. This one's down 2%. Record earnings. Crazy. XLY is up. This is consumer discretionary. It's up 4% today. This is a freaking discretionary is up 4% today. So the people that are buying into this rally should be getting in and out fairly quickly. But if you're looking for long term, I don't think you buy on a day like this. I mean, let me just see. Summary. Yeah. My entire portfolio, just to give you an idea, and I could flex on this all day long, if I wanted to. And it would probably get me more subscribers if I posted it. I'm up six figures just today in my portfolio. Didn't move anything, didn't do anything. Could totally flex on that. That's what most of these fuckers do. Yeah, look at what I made today. Well, you didn't, you may have put in like 2 or 3 positions. Whatever. I bought CAT earlier this week. I'm down on that one. But my overall portfolio is up 6 figures today. It's crazy. Crazy. And a lot of that is Apple, Amazon, Tesla. I don't own a share of Tesla anymore. I'm kicking myself. Tesla's up 7% today. Tesla's up 7% today. Whoever said shorting Tesla was a good idea at the 150 level, you're out of your freaking mind. And I told people that. I said, there's no way I am shorting a stock that has been the biggest disruptor of short selling in the history of the stock market. So, yeah. Sorry, I'm ranting. Yeah, I mean, I'm humble to a certain respect. I am a believer in living minimalist lifestyle. So while I do drive a Tesla, I do have a nice house, and I do spend money on things, I try not to overspend or flash. And like Ricky's of the world, that dude just flashes left and right. Well, I don't have good character. My friends might argue that one, Brittany. Yeah, and honestly, D-Man, capital preservation is something I haven't been very good at. Full disclosure, I think I was down, I think I've disclosed it like 20, 25, 26% last year. Down 7 figures. It's not fun, but My lifestyle didn't change. I am extremely blessed in that I had that money to lose. And I also realized that a large portion of that loss was not necessarily smart, but the cost of the tax implications, the lifestyle changes for taking some of those profits might have led me to actually lose more money than just holding and losing and selling some at the end of the year for a tax loss harvest. So it's kind of one of those things where, okay, just completely off the top of my head, and you know, it doesn't. So say you make $40,000 as a single person in a year. Say you make $80,000 in a single year, as a single person. But you're a contractor, so you have to pay for your own health care. So you pay, the government for the health care. It comes out to about $6,000 per year. If you are able to write that $80,000 down to a gross adjusted of around $30,000, your health care is paid for. So that $6,000 becomes actually, reimbursed. You can get additional assistance. There's a lot of like little stuff that kind of comes your way. Doesn't mean that, writing $40,000 of losses is ever a good thing, especially when that $40,000 of losses was actually $80,000 of gains. But you're in a whole new tax bracket when you get that $80,000 worth of gains. And that $80,000 of income actually, rather than only paying like 19% on your income, you might be paying around 50% on income. So your tax implications are big. Big, big, big. And this is crazy to me. I think it was Christian, asking me, why am I holding SQQQ? I have no fucking idea. Not when TQQQ is going like this. It's 9.2% today. Tesla's breaking 200. I think I told you guys Tesla was going to hit 200 at some point in time. I didn't realize it was going to be this run. But I pointed this out because the 200 days right at 200. A couple of days ago here, I said the 200-day is at 200. I think it was around, it might have been January 26th or so, when it was trading around 150, 25% ago. D-Man, here's my suggestion for you. If they are good companies, if they are good earning companies, do not sell just to sell. Apple, I ain't selling Apple. Apple's up 15, 20% this year. It's up 3% today. It's at 150. It hasn't been at 150 since, let's say, back in October, November area. I'm not selling just because it hits 150. Back in August, you were at 180, close to 180. That's not that long ago. Yes, you may have this, a head and shoulders kind of thing. This may be a shoulder. This may be a head that's putting in, and you may have another shoulder coming up. So you may be able to time that. Not for me. I'm not moving in that direction whatsoever. I can't time it. I just can't. Look at the weekly. 115 is the 200-day on Apple. But if it's a company like, Scott's Miracle-Gro. If you're in on Scott's Miracle-Gro down here at 47 and you're at 86. Oh, hey, I got to hit mute.